All right. You are looking live at the Nasdaq here, and a couple positive things happening here. Obviously, last week it had the its best week of the year since November of 2022. So that's a positive. Expected a little bit of a sell-off today, and even though the Nasdaq was up, the declining stock led the advancing stocks 2-1. Some people might be encouraged that this thing is starting to trade right here at its downtrend line and needs to break above that. I'm more concerned with, first of all, it broke through its 50 simple moving average, okay, and now it's trading 0.7% above this downtrending 50 simple moving average. You can see the slower or the longer term moving averages at 200, this black line is still sloping upwards, which tells us we're in an uptrend, and this is just pretty much a three-leg down correction, which was a 12% in total depreciation in the Nasdaq. But what I want to see here as I zoom in, you can see these short-term trend lines here. The green line is the 10 EMA and the pink line is the 21. So the 10 is starting to trade above the 21 now, and both of them are curling up towards the 50. And what we want to see here is these shorter term trend lines trade through the 50 simple moving average and get into a power trend. And that's going to take some time. So this rally has legs. There's going to be plenty of time to get in. You don't have to, panic buy and chase performance. But the Nasdaq does look good. The S&P is trading above its 50, and it was up slightly today. There you can see the S&P second day closed above the 50 at 0.4%. And while I'm at it, I'll show the Dow Jones. The Dow Jones is 0.7, just like the Nasdaq above the 50. And you can just see these, short-term moving averages are now trending up. They're curling up, and they need to trade through those slower or longer-term moving averages. One index that, had a good week last week, but pulled back sharply today, is a smaller cap, the more riskier, less capitalized Russell 2000 index, and this thing was down 1.29% today. The reason for that is there's a strong correlation between the 10-year Treasury yield and the Russell, and you could see how, when the 10-year came down, the Russell went up. Now, the 10-year went up today at a 4.66, and so this thing's trading really volatile, and it's causing problems with the IWM or the Russell 2000. But we'll just keep an eye on this 10-year Treasury yield. But I'm going to get to stocks because that's about as macro as I want to get. You see the Nasdaq up and the S&P up and the Dow up, and these stocks are just so big. Apple, Microsoft, that they have such heavy influence on a market-weighted index or a price-weighted index. And this is Apple was up, nearly 1.5% today. It's got this double bottom pattern. What I could say was positive about Apple's, their earnings report was not great, and the stock didn't go down. In fact, it's definitely trending higher here as it traded below the 200. Now it rallied through the 50 and closed 1.5% above the 50. So that's a positive for those who are along the Apple Inc. And you can also look at this downtrend line. Apple starting to trade above its downtrend line as well. So some positive things for the Apple longs. Microsoft, I tend to like this one a little better. It's got a lot more strength. And I think if the artificial intelligence theme plays out over years, Microsoft could definitely overtake Apple as the largest company. It was up more than 1% today. Now it has that market cap at nearly 2.7 trillion. It is trading 8.2% above the 50, just showing a lot of strength. And when you see, stock like this trading tight, like it did here within the base, like it made this double bottom, right? And then it starts rallying through the 50 and starts trading tight. And then I guess this is probably this big bar is probably earnings, but that is a trading tight and lighter volume is a positive within a base. You know, it already had a prior uptrend, which is, you know, obvious here. Prior uptrend, consolidation, and a double bottom pattern, and then trading tight within a base. And now it's just been moving higher. You know, the volume hasn't been great. You know, 7, 8 days, you know, that's the old, I'm not going to get into it, but it's traded about 11 out of 12 days higher. And I like Microsoft. I'll just leave it at that. Google, I see these, you know, well-capitalized, large market cap stocks are going to, you know, they're better positioned for an economic slowdown, and it's like a flight to safety for funds to be buying these things. This is Google, had a brutal sell-off after earnings. It has recovered on lighter volume. Not really a fan of the chart below the 50. It's taken forever for it. You know, usually when you see a vertical violation like that, it's usually a sell sign. It's always a sell sign for me, but if this is, you want to see it rally right back through the 50. You don't want to see it take forever. And right now, this is taking weeks for it just to get back up to its 50. And so you want to see a shakeout and a rip right through. You don't want to see it taking, you know, all this time. So to me, that's a negative for Alphabet. Meta Platforms looking much better. This is what I'm talking about. You know, yeah, it violated its 50, and that's a sell. But what did it do? It rallied right back through it real quick. You know, and now Meta is how much above the 50? 3.2% above its 50, whereas Google, and I think they reported, you know, within one day apart from each other, and this one's 2.6 below. So you can see Meta is way stronger than Google, and me likey much better. And that's why it's on our ready and watch list, and Google isn't. Anyway, Amazon, this one had a huge sell-off. You can see this first shakeout here, and then rallied up, had that nice sharp second shakeout there, then rallied right back through the 50. And that's what you want to see, that power, you know, when it rallies back through its 50. So Amazon looks much better than Google to me. So I prefer Microsoft, Amazon, and Meta right now. Things could change. You got to be open-minded and flexible in the stock market. Tesla, I have no interest in, below the 50, and I don't even know what it did today. I'm not even following this stock, to be honest with you. Yeah, it's 10% below the 50 and right there at the 200. So that's got some work to do. NVDA, this one, I could point out that, you know, people are watching this. I know I pointed out the head and shoulders pattern, but also it's trading right here at a down, breaking above a downtrend line here with this, you know, pretty obvious double bottom base pattern. Once again, you want to see this thing rip through with some power, and it's just kind of, you know, lollygagging its way through, but it is above the 50, and it's heading north. It's a big stock, so it's going to take a lot of buyers, a lot of demand to move the supply. 3.2% above that 50. So NVIDIA looks better to me as well. So maybe another stock that could appear on our ready watch list. I think that's it for the Magnificent Seven. I'm not going to go through sectors today. Most of the stocks, like I said, at least 2 out of 3 were negative. So I'm just going to go through some stocks that were showing strength, and one that I really, really like is Eli Lilly. They had some news on their Alzheimer's drug today, and obviously the market liked it. It drove the price up nearly 5%. Lilly had strong earnings report last week, and the stock didn't move, and now we have a delayed reaction move today, and it is 4.3% above the 50. Eli Lilly, you know, looks good to me right there at that 600 level. I had it on a ready list at 575, you know, above this previous high here, but 601.84 looks good to me as well. Novo Nordisk, 188. To me, this is, you know, if you look at Lilly, and let's just go long term. I mean, if you're not trading these stocks, you're just buying them longer term, and you're investing on a thesis that, you know, more and more people are going to be diabetic, and more people are going to want weight loss drugs, and these Lilly and Novo Nordisk are no-brainers. It's just, you know, your time frame, right? If people want to trade, day trade, swing trade, these probably aren't the best vehicles. But if you're holding in a retirement portfolio for a long time, Yeah, I like both of those, Novo Nordisk and Lilly, but I'm going to go back to the day chart because this is swing trading. I like swing trading, and I think anything above 188, this thing looks strong to me. Remember, today was kind of a profit-taking day, and this one held up nearly 3%. So Novo doing nothing wrong. Deckers, another strong stock, made a new high today. It broke out on earnings. Here you go. Once again, I talked earlier about the, prior uptrend, then you get consolidation, right? And then it trades tight, and then it, blasts higher on earnings, and it's just going to continue higher, upgrades with, better earnings than expected. Their Hoka and UGG brand shoes are just selling a lot better than expected. So Deckers, very strong stock today and sticking out like a sore thumb. CEG, this is Constellation Energy. It's a spinoff from Exelon. And I got to go back to the weekly because it is, relatively new IPO. And you can see the cup with handle pattern here where it broke out about the 95 level, and it's just been trending higher, slowly but surely. Today they had earnings, and that's why it had a nice response to its earnings report, and you could see the RS just blasting higher. So obvious strength there. I'm going to go to the insurance stocks. I was teasing earlier about how sexy insurance is, and that was before last week when the some of the growth stocks really started to gain traction. But this is Gallagher, and it's showing support at moving averages, which is what a trend trader likes to see, right? Giving you a chance to get in, easy hold, add on these dips, buy the dip mentality. So Gallagher looks good. I wouldn't be buying it here at 242, but it's a strong stock. And like I say, this portion, I'm just trying to show strength here. Abercrombie and Fitch, this is a serial gapper. It gapped, let's see here, it gapped here, and it's gapped here, and it's gapped here, and they have earnings on the 21st. So it's getting a little long in the tooth, but still showing strength here. And yeah, it's extended, and I wouldn't entertain any thoughts of buying it here and expecting big moves from Abercrombie and Fitch, but it is showing strength, and that's the purpose of today's show, is just showing stocks with strength. Now this is XPO, and this one is showing strength and trading in an area where I think I could get into it anyway. I don't know about you, but it's showing the prior uptrend and the consolidation, which is what I like, because it has the ability to move, and it's been consolidating for a while, and now trading near an interesting area here at $80. So I kind of like this transportation stock. NEU, I'm not going to pretend like I know a lot about this company. I do like the chart. The prior move higher, shows the ability to move higher and then consolidates, for a few months. And now starting to move out of this consolidation area. So that's just why I wanted to point that out, showing strength, making new highs. But yeah, I don't know anything about that stock. TW. Oh, wait for it. Boy, that one's been beaten up. TW, another one that showed prior uptrend, consolidation, and now moving out of this base, just showing strength, making a new high today. TradeWeb. Okay, got some other ones here. Oh, a couple of oil and gas stocks. There's a lot of oil and gas stocks reporting earnings this week, and it's probably going to have an impact on some of the stocks, even if they don't have earnings. This is Sunoco. They pay a pretty large dividend, made a new high today and pulled back. Just been real strong, with the price of oil going higher. A lot of the oil stocks have been doing pretty well. This is a transportation pipeline stock, Frontline. Another one showing strength, and you have a lot of these pipeline stocks reporting earnings this week, including International Seaways. Yeah, they report tomorrow, so there's going to be some movement here. Okay, I'm going to move on to DELL. This one's been on our ready list for obvious reasons. It's double bottom base pattern. I believe it made a new high today, maybe not. It's just showing strength. No, I don't think it did make a new high, but it is showing strength, and that's why I wanted to show this pattern. Yeah, 72.30 is just shy of the old high, but that one looks good to me as well. Earnings coming up 11/21, so soon. MSTR, another one on our ready list. This one trades with the price of the digital currency markets. This one just got a nice consolidation. It's up 200 something percent this year. One of your top computer software database stocks for sure. And okay, I'm going to get into some of the pegs. PEGs, people ask, what is a PEG? It's a power earnings gap, and DraftKings had one last Friday, then followed on today. Now, today I was looking at, I got to go to the 5-minute chart. I was looking for a little pullback, some profit taking before the buying, but this one didn't quite have it. This one, you could see the gap up on earnings and the ramp higher. And then today, a little bit of selling, but then just started moving higher. So DraftKings had a nice day today. Palantir did get that profit-taking selling that I was looking for, some buying coming in late in the day. So maybe we'll watch for Palantir tomorrow. I should go to the daily chart. That was the 5-minute chart that I was looking at. And Palantir, yeah, not bad. It was only down, less than 2%. And I will go to the daily chart on DraftKings. There you can see the gap higher. 15, 16%, and then today tacked on more gains. So at some point we would expect some profit taking, and that might be an opportunity if you're not already in that one. DoorDash, this is one that had a nice gap higher, followed through, and today pulled back. And that's what I'm looking for anyway on these power earnings gaps. Gaps higher, buyers come in or shorts cover, and then you get some profit taking, and that's where the opportunity lies. Some buyers coming in towards the end of the day. On the 5-minute chart here for DoorDash. All right, the next one I want to look at is Pins, and I haven't even looked at this stock. Went higher last week on earnings, man, and it really did see some buyers or some short sellers covering here, and then today pulled back, and that's what I want to see, the pullback. I want to see the pullback where it finds support and where buyers step in, and that's where the opportunity lies. On the power earnings gap, what other one? Oh, Shopify. Yeah, they had a nice move last week. I followed it up on Friday. Today, slight pullback. So let's see if it can pull back a little more tomorrow morning. I'm going to go to the 5-minute chart. See if it could pull back a little more tomorrow morning, provide an opportunity. Some buyers definitely came in the last part of the session today. Oops, sorry about that. That's YouTube. And then QLYS, QLYS. Let me see here. This is a 5-minute chart, and this is what I'm looking for here. The have the gap up, ramped higher into Friday. Monday morning, the profit takers come in and say, I'm going to get out of this thing, take my money and run, go someplace else. And then towards the end of the day, it starts ramping higher as the buyers come in. And so there's your opportunity here as these buyers come in. There's pretty good buying here on QLYS. This is one of those cybersecurity stocks. Cloud-based security, yeah. So that one looks good as well. And you can see the big move on Friday. My goodness. Nearly 12% on more than 200% above average daily volume. So this one looks good. QLYS. Okay, that's it for me today, except for I lie. One more thing. I got to look for one more gapper tomorrow, which is TMDX. They reported earnings tonight, and I'm going to get more into it tomorrow morning, but they did beat earnings and raise guidance, and they talked about their this is an organ transplant stock, and they allow paramedics to and doctors, medical teams to transplant organs in your body, like hearts and livers and kidneys and things. And so they had this I guess they had this contract with an aviation company, and they split ties with that, and that's why this stock sold off, because they were going to have more capital expenditures with the new air transportation. But today I guess they cleared some of this up after hours, so I'm gonna have to get more into it tomorrow morning and research this stock a little more. But definitely that is not to be ignored. A 34% move in after hours action, and I believe the volume is pretty heavy tonight. So we're going to look at this stock more tomorrow morning. This group is 187 out of 197, so it's been selling off a lot, horrific sell-off in a lot of these stocks. You can see on the weekly, it's just been 60% off of its high. So it's getting some of that back after hours, and definitely one to watch for tomorrow, as it looks like it's going to open around 54, 55 tomorrow. We'll have to wait and see. Anyway, that's it for me today. Thanks for watching. There's a lot more stocks setting up now. The market has changed. It's a different environment, so you got to change your thinking. You got to become more aggressive and increase exposure to the market. Like I said, with the Nasdaq above the moving averages and starting to have these short-term moving averages trade above, hopefully trade above. This is what I'm looking for, trade above the 50 or the slower moving average, a longer term moving average. That's what we want to see, and then eventually get into a power trend, but that's going to take time. It's going to take weeks. So like I said, you have time. You need to curate, or go through the watch list that I have every day. There's a lot of winning stocks there, and at mcstockcharts.com. We never give up. Thank you for watching.